Hello, Warriors. Mary Sinatra. How are you, Michael Bergman? Seem to be echoing a little bit. Ryan, how are you doing?
Yeah, hi, mate. That might be me. I'll put my headphones on. Hang on.
Oh, okay. I thought I heard myself.
Good early morning, Dale.
Hi, how are you, Kman? So,
Very well.
King Dollar, right? King Dollar.
King dollar or crap everything else?
Yeah, you could say it either way, I guess. Here's Euro making new lows. I was really dead wrong on this. I certainly couldn't short it down here. Are you taking anything in on your Euro shorts? Came in on your puts or anything? Nice trade. And Brian,
Thank you.
Ryan.
Yeah, I've been slowly scaling down. So I got about 25% of my puts left open, unhedged, for the whether it be today or the last couple of days of the week. I think today we might see we're trading value date end of month, right?
Yeah.
Traditionally, U.S. corporates may be needing to buy a few dollars. So my bet is that we see peak dollar demand somewhere today during the US day, perhaps around 4 or 5 p.m. London time. And I'll probably hedge everything for now and then see if we get a bounce.
Okay. And Ryan, you too, anyone that's been following, Forex Flow guys that joined us, you were negative Euro for quite some time, and are you tempted?
I'm in the same boat as Kay. I think we look to see maybe a last hurrah on the fix today, with the potential to try along. I've been very bearish. I wish I'd sold it, but I'm sitting in cable short, so that makes up for it a little bit.
Well, sometimes just not being the wrong way is a winning trade.
Yeah.
I mean, you know what I mean?
Yeah, exactly the same case yesterday with dollar yen. I was very bearish dollar yen yesterday, and it tipped out to 127 without me. Again, it's back up to 128. I'm feeling less bearish today. I'm still bearish, growing bearish overall, but today it's been on a proper grind up. Obviously, Bank of Japan coming up, so need to see what's going on.
I would love to attempt. I like central bank days. For fading, especially something that if the yen would blow to one more high, because what the BOJ says is ineffective to take U.S. dollar yen back down and get a stronger yen, because these are confirmed highs. And, normally markets don't peak when price and momentum are confirming. So perhaps we get, one more high over 129 on the BOJ. Could that happen?
If you look in the chat room, we've got about 4 charts all showing pretty much the same thing on the yen in the last 10 minutes. We're getting a confirmed lower trend. It's been building. We've been highlighting it this week, how it's just, dipping lower. We had another low yesterday down to that 127. It shows the trend just dipping south now. But this pair loves to range. And it's not doing something silly like it has been. It loves to range. And if we start seeing, over the course of a few days, a couple of weeks, decent tops and bottoms being put in, then it gives you a range to trade, lets you know, you can trade in the middle. Plus, it also gives you your break points. If it's going to break, where the break points are likely to be, and then you can run with those. So it's all about building up the picture, painting the picture, and then you work out what to do with it. But at the moment,
the picture to me is it sure worked off its overbought condition without giving up much price and just moving sideways, which isn't bearish to me.
No, it could be a bull flag. And we have to take everything into account, because if you look at the slightly longer term, it could be a bull flag. I think Bank of Japan is going to be a pretty binary event tonight. Either Kuroda in France saying nothing, and I really do think that there is a fair possibility of at least putting in a solid test of 130. because I think a lot of the yen pairs have been, a lot of the yen shorts have been taking profit ahead of the Bank of Japan. And it's, to me, it's really going to be a binary event. Either they say nothing and they let the government decide, MOF decide, and then we might be in for an absolute serious test of 130 and seeing some of those spikes again that we saw earlier this month and over the end of March, or Kuroda finally turns around, which to me is a realistic possibility still, despite what he said. And then we are trading back probably under 125. But I would say that probably, of course, dollar yen is the main traded thing, but probably yen crosses will go harder than, possibly harder than the dollar yen actually.
Okay, so let me, guys, ask you this. I had this wedge line drawn for a while, and look how it went right to it. How do you buy a close like this? What lit up risk a little bit today? And what an interesting time to have a Fed meeting with the market near a major breakdown, where you could really have some type of, crash. I did the weekly here, and this big megaphone formation line comes in right around where that other line did. And, is the Fed going to be as brave and hawkish with the market on the verge of breaking down and re-entering this megaphone formation, or even if you want to keep it simple, just simple breakdown under these lows?
40, around 40, somewhere
41. This low
41,
like,
just sub 41, right?
Yeah, right
I've got
here.
a big level there as well.
Yeah, and that's where Blake's big neckline on the Head and Shoulders comes in, that he's been featuring here on F.A.C.E and probably in the rooms for, I don't know, about since the first break in January. So I think this is really going to test the Fed's mettle. The market's under pressure. Maybe we get some short covering into the Fed on risk. I think that's even a bigger event than the BOJ this week.
Yeah. I think the what I said. I mean, the money markets, the yield market, the money market can stomach rate hikes, but to me, the real test for equities will be the QT side of things. What they do with QT, because that's effectively taking liquidity out of the punch bowl, right?
Right.
And I think that's going to have the bigger impact. That's going to be the test for equities, in my personal view.
Okay. Not any kind of major flight to quality in the bonds, and I think we got, and the euro I think got down to 7 on the DSI, but the bonds are bouncing from a confirmed low. There was divergences short term.
What's the worst the DSI can get to? It's been
negative. I've never seen 0.
Can we do like oil? Can the DSI go negative?
Yeah. So anything else that that really has your eye? I go up and down the screen. I have a lot of I don't knows, either ors. Nothing at this stage in the market that I really feel a lot of conviction about.
Yeah, bonds are still, looking a bit saggy in yields. We're seeing a bit of a divergence again, or between dollar yen and the yield story. Just for today on an intraday basis.
Yeah.
It's holding its gains while yields have slipped back in US 10s. It's on the bus, it's off the bus. Again, dollar CAD keep coming back to it. That's still sitting up on its highs. And that's with oil moving higher. It's a lot of the correlations are still up in the air, and I think that's what gets old hands like you and me, Dale, thinking not sure what's going on, because nothing is following the old rule book. Yeah,
I think you can make any video go viral if throughout your rundown on the market you said, I was wrong or I don't know. Because you go and try and find a video like that out there anywhere.
Yeah.
With people saying those words. Go and find a tweet saying that anywhere at any time. I was wrong, or I don't know. And, if you don't say that, you're not being authentic, because there are always times you're going to be wrong, and there's always times you don't know. And if you're patient, you will know. Don't try and force anything, right? Just, just keep tracking the markets, and so the picture will clear up for you. That's my advice. Don't force it.
Nice. Yeah, we spend most of our day was watching the screens, trying to find out what we don't know.
Yeah. So anyway, Stel, what are you thinking, buddy?
Hey, good morning.
Good morning. Afternoon for you, right?
Yeah, it is afternoon. Yeah, you said it. King dollar at the moment, and if you look at DSI, 95 on the dollar. I think it's 7 for the euro, something like that. So it's starting to get really stretched, but the market is the market, and at the moment they want dollars. And Kman said quite rightly, I think, that we might see the peak today, with it being T+2 being month end. But the big picture for me stays the same. We had Aussie CPI a few hours ago, up from 3.5% year on year. Expected 4.6 came in at 5.1. So we're still getting beats in inflation pretty much everywhere. And if a print doesn't beat, it's still on an upward trend. So I don't think we're anywhere near peak inflation, barring a spectacular catastrophic event of some sort. So that is going to keep, I think, pressure on central banks to act. Now, the ones that haven't acted yet, like the Bank of Japan and the ECB, I'm really struggling. Bank of Japan, you can argue that their inflation is still low, but the ECB at 6.5, whatever, 7%. I mean, it's just ridiculous.
I saw a tweet on Spain; it was over 50%.
PPI, PPI was 50%, and this is going to get translated into prices of goods and services coming up. So. And into the CPI calculation. My main view hasn't changed. I still think we're going to be seeing high inflation. As a result, we theoretically should be seeing central banks acting more and more. The Fed is probably now starting to, how should I put it, differentiate itself from the others, as in, the market's already pricing a lot for them, and I think the risk for the Fed is to slowly start disappointing, and the risk for the other central banks are probably the other way. So you have to be careful, but I think this is the big picture, and I think yields are going to continue going up. Remember, I did say after this massive move in yields, 10-year US. I was saying I think 290 to 3% would be some good resistance for a pullback, and then we go straight back above. We are seeing this pullback. I think we might have a little bit more to go, but again, barring a catastrophic event, I don't see anything that's going to keep 10-year yields in the US at least below 3%. I think it's going to go quite a bit higher. And that has a knock-on effect then on risk assets. We've talked about it so many times. But at the moment, the markets are still in relatively good shape. I mean, the S&P is at 4,200. Yes, we're down, what is it? 20%, 15-20% from the highs or whatever it is. But it's still, if you look at the weekly chart, it's still a very, very small pullback at the moment.
The velocity of this decline was pretty impressive.
Yes.
Yeah. And I just wanted to say something like, about I don't know, maybe this will help traders. So if I don't know, when I look at longer term stuff, I bet Ryan does this too. And then I go to a 15-minute chart like the dollar, and you have to lower your expectations to get, when you have smaller TFs. But the dollar, makes Kman's fundamental argument, the fact that we're not confirming up here and we're so overdue for a pullback, where you could take a shot here and risk 50, 60 pips looking for a reversal today. So, I may not know where we're going for the next 3 weeks, but 15-minute charts open your eyes to things you don't see, Brian.
And
right?
Exactly.
You described something which is crucial. You said, this probably could be a good trade with this risk. You know your risk. You put it on. You know your risk. You put your stops in. you get taken out, you get taken out. I got stopped out at, I had a couple of small patterns in play, long euro dollar, long euro pound, negative on the euro dollar, positive on the euro pound, more negative on the euro dollar than positive on the euro pound. But overall, it wasn't a disaster. I just cut both. And you know, you admit defeat on this one and you move on to the next one. So
So it's probably,
that's the way you
go
look
ahead,
at
Ryan.
it. Yeah, I was going to say that's the way you look at it. I said this morning we were talking about, you know, traders who fancy catching knives or, you know, tracing. The best thing to do in these situations, like you say, go through the time frames, pick yourself 4 or 5 levels above, 4 or 5 levels below, and give them a score, rate them, you know, in terms of strength. You know, euro dollar 105 is my level. That's it. I don't care what's happening in between. Maybe that stuff will develop. 105 is my level. That's the one I'm looking to trade. And I'll wait for it. And you score your levels, and those are the ones you have a bit of conviction in. And if you want to trade any of your other levels, fine, but know which way the wind is blowing. Don't get caught offside because you're trying to fight a trend. If you're going to fight a trend, keep your risk low, keep your trade size low, so that if you are wrong, you're not wrong bad.
Hey, you know, that's some great advice. And good morning, everybody.
Good morning,
I actually
buddy.
did that. I did that yesterday with the sterling, and I was wrong, but you know, I knew what level I was targeting. I picked it up and I found myself on the wrong side and I just took it off. You know, I mean, it's, you know, you have to pick your levels that you're going to trade. You know what I mean? So
you probe and protect.
You do. I want to show you guys, like, you know what Ryan is talking about. And I was waiting for the sterling to get to this 126 level, and you know, like 126 and change once we finish this. And I tried picking it up here. And it was in the middle of the day when, you know, things were still moving, and you know, I found myself on the wrong side, and I just got out of the trade and moved along. But, you know, you have to pick your levels. But let's, you know, speaking of levels, let's talk about the euro. And I'm sorry, I'm jumping in a little bit late. I had a couple things I had to do. But how crazy is this of a move in the euro dollar right now? And let me ask you guys, can we get more? Do you think we can get more at this time with sentiment stretched as much as it is, and with the euro breaking down through the post-COVID lockdown lows? Do you think we can get more out of the euro on the downside now? What do you think?
Yep. You know, yes, you can.
Who
knows where the price can go? You know, people thought cable had stopped at 129, 128.50, 128, 127.50, 127.
Yeah,
you know, all the way down to 125. It doesn't matter where it goes; it's how you trade it. That's the key that you've highlighted there. You know, how do you trade it? If you want to catch those knives, make sure you're only losing a fingernail, not your hand.
Right. You know, and here's a great example of this. I shorted the euro yesterday, and you know, I'm sitting in it. I'm up over 50 pips. Benedict in our chat room, he started getting short 150 pips ago. When it broke, this you know, kind of started breaking down 2 days ago. And yesterday I felt like I was late to the party. But you know, these are the types of moves when they start to develop, and you're like, well, it's too oversold, or the sentiment is too extreme, or whatever. You know, these are the types of moves that they can really cascade. And you know, we may look at the euro tomorrow down another 80 pips and say, well, you know, I'm glad I got short today or the day before. I mean, we're cracking some pretty key levels here. I know I just tweeted this with the ForexAnalytix Twitter handle, but look at the dollar index. I mean, we're breaking this. This is a 6-year trend line, guys. I mean, you know, I think we got to, you know, look at this and
it's milkshake time, maybe, huh, Blake?
Yeah, I know. Everybody has said the same thing, you know, with Brent Johnson's, you know, commentary about the milkshake theory, which is funny because it's actually just, you know, something that we've always looked at is, you know, the dollar over the last, since I've been trading currencies, you know, since the early, you know, 2001 is that, when you get risk off, the dollar just comes, becomes a liquidity crunch, and the dollar just comes under pressure. And so this might be the case, and you were talking about the S&P head and shoulder pattern that we've been talking about. Yeah. This is the chart right here, Dale.
Yeah.
We're there at the neckline. Yeah. You're right.
What's the Fed going to do? You think they see the neckline?
No, they don't care about technical analysis.
Yeah.
No, but what they will care about, in my opinion, is if we get another, 10% decline from here. Yeah. And then, when you take the S&P more than 20% off of the highs, that's when you really have to start worrying about Fed, I say intervention, Fed commentary, and they start jawboning. There is the wealth effect is real. The wealth effect is a real thing, and the Fed really leverages.
Looking forward to experiencing it.
Anyway, hey, when we were talking about this chart on the morning edge, which is specifically for the ForexAnalytix subscribers, we do that in about 40 minutes from right now. You notice I have this the dotted line. The dotted line would be how long it took us to develop the right hand or the left hand shoulder. So, am I convinced that the S&P is going to break down right now? I'm not, but that doesn't mean it won't. Especially when you have the dollar doing what it's doing. And it's the dollar's, just ripping across the board. I know you guys talked about the dollar yen, and you talked about how Grega, Kman, myself, somebody else actually updated the dollar yen chart. Who is it?
Mate.
Oh, was it you? It's so funny.
You get nothing for now, then you get four at once.
It's funny because you draw these things out, and then I had to go back to ForexAnalytix and go to my daily update last night. I'm like, did I have that drawn? I'm like, oh yeah, I guess I was drawing that last night too, with the flag support, and talking. How many days have I been talking about the flag? I'm like, it's. When you look at so many charts, you're like, where did I get that idea from? But it's funny because there's four of us actually updating the same thing. But I have to tell you, when you talk about trading it, who traded it? Let me just show you something. Okay, man, I'm gonna rub your ego.
There's a copy,
and then I'm gonna rub your belly after I'm done with that. Just kidding.
There's a copy right there.
Let's see, right here. Dollar yen filled by at 127.02. Boom. That was a really, really nice trade. That was in the trades room in our chat room. Really nice pickup yesterday. And I told you that when I got up this morning. I meant to tell you that last night. I just got carried away with the Phoenix Suns.
They have that injured player back, Blake?
No, we need Booker back. They just need to win the series without him. But
what happened? Did you win?
We did. Yeah, fortunately. Good. Yeah, it takes a little pressure off. Anyway, but hey, that was game 5, man. It's a big deal.
Yeah.
Anything to keep my mind off of other stuff. So, but yeah, it's one of those things that I wanted to say last night. Like, Kman, great job, really good trade. But I also want to talk about the Aussie dollar. Look at the Aussie dollar. We're trading near
analytics room all the time, right?
What's that?
These are things we talk about day in, day out in our chat rooms.
Yeah, it's live stuff.
Yeah, this is the, like, just so you guys can see. This is the chat room, and this is this is probably the slowest morning we've seen, and I think these are just some charts that we posted since I've been awake. Just you can see it's been very slow. But we have our trades room where we're talking about what positions we're in. And we have the macro chat room, the flowonomics room, if you will, where everybody's talking about the macro point of view, and the news and research tab.
I think it's important to point out with the trades room. The trades room isn't really designed just for people to put trades in and say, hey, look what I've done. People are encouraged, and this is talking to people who aren't in our room. This is here to encourage people to put their trades out in good order, in good time, with an explanation, so other traders can look at it and see, right, what is this guy seeing? What is this girl seeing?
Yeah.
How are they setting their trade up? Anyone can put in a trade 10 minutes after I bought this and it profited here and it went there. But no, we encourage people to put their analysis with it. So you can look at a trade and think, right, he's buying that because X, Y, Z. And that's what helps traders learn.
This was 20 minutes ago.
Beautiful.
It says, I had to sell half size Aussie dollar with the euro continuing lower. I think the US dollar may continue to grind while below 71.70. I'm going to stay short.
Exactly.
That was my update 20 minutes ago on the Aussie. And, you can see the Aussie in the last, here's a 20-minute candle if you want to or it's a 15-minute candle, but you can see what's happened the last, 20 minutes. The Aussie has gone from 71.
It's not a competition. It's not to get pats on the back. It's to show inexperienced traders, to help traders how we look at trades and the reasoning behind a trade. And it's done in good time. We don't suffer people who come in 3 hours later and say, "Hey, I'm just made 50 pips 3 hours ago." That's crap.
Yeah, no, I don't like weatherman trading. If you want to irritate me more than anything, try coming up to me or in our chat room and saying, "Oh, I sold the euro 30 minutes ago." I'm like, "Well, where were you 30 minutes ago?" you want to talk about getting on my bad side really quick? I don't put up with that. You go in the chat room, you say things like that. I'm going to say it's not helping anybody doing that.
Yeah.
So,
but we acknowledge that obviously some people aren't in the chat room 24/7 like we are. And if I've done a trade and I've not been at my desk or whatever, I've done it on the phone or whatever, then I'll come in and I'll put up a screenshot of the trade just so people can see.
Yeah, that does happen. I mean, look, I've been on the road, pulling over on the side of the road, taking trades before, and then come back and say, "Hey, I was, I took this trade last night because I was driving between kids' soccer practices." I have done that. I mean, but I'm talking if you're in front of the computer, it's that's the type of thing. But anyway, it's neither here nor there. But the point is that being in the chat rooms, it's a really nice place to be. I wanted to, but I'm sorry, I didn't want to go in that direction completely, Ryan. I actually want to talk about the Aussie dollar, and I wasn't actually even looking to tell people, oh, here's the chat room and all that stuff. I actually just want to talk about the Aussie dollar in general because the CPI data came in hot. The Aussie has consolidated. I woke up this morning and I saw the Aussie trading at 71.50. It was exactly the same spot it was last night when the data came out. The data came out, the Aussie basically spiked up. You can see it right here. We are right here. This is the 15-minute candle. Right here, spiked up to the 70 level, came right back down again. And I'm like, man, this Aussie is not trading well. Then, I went to bed and then it spiked up into 71.90, rolled right back over. And here we are. The thing is when you have the dollar, and the point I'm trying to make here is when you have the dollar breaking out, and this is the dollar index. And this is the point I was trying to make on Twitter when I tweeted it out on the ForexAnalytix Twitter handle. You have to watch currencies today because this is the dollar index. It's not just the euro story. This is the dollar. And when the dollar is ripping like this, you got to start looking at everything. Like the euro's breaking down. Yes, got it. We're below the 161% extension. Sterling, we could test the 618 retracement on a monthly and weekly basis. That's post-Brexit lows. So, you're talking about, or no, I'm sorry, that's post-COVID lows. But you're talking about 125 easily. And then you talk about the sterling can play some catch up to the euro. It sure could here. 125 levels possible. You look at the Aussie 70 cents is possible again. When people start talking about deflationary pressures, and lockdowns in China and how, China is letting their yuan, or renminbi or, weaken, this is gonna weigh on the Aussie, and you guys know I would love to buy the Aussie down here at 68 cents. If you guys know me at all, I would love to actually be a buyer right here. I'm
actually getting a bit concerned for the Aussie now.
I mean it definitely is not acting well. You got the Kiwi that looks like we could trade down to here. Do we have any data coming out, guys? Sorry.
Just small stuff.
Oh, okay. Nothing to write home about. But dollar Canadian. I mean, remember this is a big one. I'm just giving you guys a real quick update here because I just think it's so important going in today. That's a wedge false breakdown of the wedge usually leads to a breakout. That's just, you know, common basic technical analysis knowledge right there. Dollar MEX holding really key support. Look, I think these emerging market currencies have been very strong as of late, but they still haven't broken down. Dollar MEX has not broken down, and it's picking up pretty steam. I was actually short this yesterday because of this gravestone doji. You know, I stayed short and then I closed it out. I closed it out yesterday. I thought that gravestone doji was going to play out. It didn't. And I got out for a loss yesterday. So, you know, oh, actually I take that back because I was shorted actually the 200-day moving average. I made a decent money on the dollar MEX. I lost money on the dollar rand is what I was short dollar rand. And that one went up in my face, you know, made money on one, lost money on the other. But you can see the dollar is moving. It's not just a euro story. The point I'm trying to make here is there's the dollar yen. Dollar Norway is broken out, guys. And I mean, look at that. It held above the 920 level and it's at highs of the day right now. This is a dollar across the board story. And that's the point I'm trying to make. And that's why, and one of the other things, and I know Dale, you got an interview right now, but the thing is, if the dollar is really moving across the board, it's going to start getting people's attention. It's already got people's attention right now, but the more that it rallies, the more that equity market traders start looking around and saying, why is that happening? And when they start saying, why is that happening? I don't know. Maybe I should own some dollars too. It's called the domino effect. And when you have one asset class that really starts to move, it starts to influence other asset classes. And so that domino effect is something that we should all be paying attention to. Anyway, hey, I just wanted to bring all that up for you guys. It's such a key development today in currencies. And remember, the currency market is the biggest market in the world, and it does influence other markets. I'm done. Dale, I know you have an interview. Make sure you guys check out ForexAnalytix. Come join our community. Make sure you check out the Trader Funding Program if you want to look how to access, you know, larger amounts of capital with a small assessment fee. We have a lot of people that are doing this because they just didn't have access to, you know, trading proprietary.
Yeah, no, they weren't born with a silver spoon.
No, and they don't, you know, necessarily have friends that have $250,000 that they're willing to loan them. So
look, don't want to lose that friend either.
So yeah, just take an assessment. Go watch the video. It's a 2-minute video at the very bottom. It's got me on it. You can see it right here. You just watch that. They'll tell you, give you a really good overview of everything. But I want to say thank you, team, for being here every day. Dale, have a great interview. Thanks, everyone. Buddy. I'll catch you all.
Cheers,
yep, catch you all tomorrow. Cheers.
All right. See what a great. It's not just ideas; it's education, F.A.C.E, and you're probably talking about 150 years of experience, trying to help you not step on landmines. And thank you, team, very much. And Raksha, Sony, one of my favorite people, back with us. I always look forward to talking to you, Raksha. Welcome back to F.A.C.E. I'm going to ask you to unmute now so we could talk.
Hello.
Hi, Raksha. How are you?
Dale, how are you?
Good. Welcome back to F.A.C.E. King Dollar, King Dollar, King Dollar. Huh?
Thank you. I just love to be here. You know this.
Yeah. Okay. Oh, gosh. Look at what she's looking for in the dollar. All right. Go ahead, Raksha. Tell us what Bhumi's doing, Raksha. I always love your charts and your work, and you're prepared for, what's really driving markets right now. So tell us what you're seeing.
Yeah, it's been a very interesting month this time, actually. And as I was just listening to Blake about all the things, all the valuable information he had actually shared with us, while I was just listening to that and was waiting for this breakout, which has already been done by our DXY. So right. What I feel now is that it has actually just about to touch the 2020 high. As you know that I always go with the historical prices. 2020 high is something which I feel that might be a good resistance over this huge humongous rally right now. But If that is the case, we can see a pullback back down by like 102 and almost 101 back to this price.
Yeah.
It is looking really super bullish, because in my long term, if I see on a higher side of time frame, I feel 106 to 107 is something which will be a good resistance, a major resistance for this rally for this coming month also. As we are now shifting to new month now, the new levels will be there for the Bhumi. Right now it has just broke out like a rogue here, and all the levels are just below this. He's just laughing over this right now. That we'll see how far I can go. So what I feel, this is the price I'm looking for DXY on a longer term, maybe in next coming month. We can see this major resistance for 107, if only if, as there are many major R2, R3 for this rally, like the historical, the way back to like 1987 January low high is there, 1981 November low is there, and then this July 2002 low is there. So these prices are also, it's like 103, 104. So these are something which might disturb this this rally here. If it surpasses everything, and definitely it's going to go for 107 to 106 at this price as a very major resistance, where we can see another a deep pullback back in the DXY right now.
Okay, bullish, same breakout. A lot of people looking at the line that you showed, Blake showed it. So, you know, when everyone's looking at one thing, sometimes that's all the market needs. What would you do if we close back underneath this downtrend line that we're closing above, well, that we're trading above right now?
So see, we still have like 2 days for this month, right? And I'm right now I'm looking for this monthly chart. So if I will be waiting for any new trade, I won't be doing anything related to DXY right now until and unless I get some kind of this is not a good close. Definitely it's not a good close, or not a good breakout of a trend line, if we technically speak, or even if a basic one, because what I personally follow is at least like above 50 to 60% of a candle. If it is breaking out any of the trend line, any of the resistance, or any of the support, then only it's going to be a good close above that line, or a good close above or below the support or the resistance. Now this definitely is not a very good breakout. As I can see, it can go back like in next 2 days. It can just reject this 2020 high. It can come back and it can just close below this. But still, I have a bullish sentiment, as I have just plotted Maya also in this, Bhumi Maya on that. So it is still in the green zone. That means still there is a bullish sentiment in the market. We still have some bullish push here for any close above this breakout line.
Okay. You know, I just, you know, just want to, I always try and look at the other side, and, you know, there's nothing bearish about the chart, but, you know, something I've seen in my career is that markets always look the greatest at the tops. Yes. And they always look the worst at the bottom. So, you know, but momentum's there, everything's there. The effect, the knockoff effect on the dollar, what markets are you looking, you know, normally would be, except in the last 6 months, a strong dollar hasn't hurt gold until recently. I think it's probably more about yields. What's your view on gold? To me, it still looks negative, even though it could bounce. Okay, so
gold has obviously, like, it has just made the highest highs, and then again has tried for that. It has made a very good double top here. It's a very, very decent double top with a good divergence here. So definitely I feel that it might be going down, but by this month, by the end of this month, no, I don't feel so. But still, I'll just share my drawings here. It will be a little bit messy.
I shouldn't have had mushrooms in my omelet today. So, I know you don't understand that. Anyway, so okay, gold's holding here, and yeah, people are relating to your charts right now, Raksha. They like the psychedelic charts too. So yeah, we're getting a little reversal day here at support.
We have a support here, and that support is almost at like it has swiftly rejected the last month's low,
Right.
March low. It has swiftly rejected that, and I will be buying anything for in gold, or I will be bullish in gold only and only if it breaks this resistance, and this resistance comes at near 1905, or for a safer side I'll just go for 1906. As you can see right now, it's just a star has appeared here. This is the trend star here, which is showing that there is some buying pressure in that, but still I will be buying only and only if it gives a very good breakout over this resistance. So if, like as I say, that dollar, if it rejects the 2020 high, then we can see some kind of movement in gold here. Right now, I'm just watching here between this range of 1906 to 1897. I will really not suggest to go for any kind of trade entries. Either if it gives a breakout above, I'll be buying it, and my target will be around like 1919, 1920. Okay. And if it breaks down, then I'll be going for 1877 on a longer term for the next month. So I'm just waiting here right now, just giving a good breakout down here.
Okay, so let the market tell you one way or the other. You kind of have it bracketed with sell it underneath support, buy it over resistance here.
Yes, absolutely.
Okay, so oil, Russia's, they're not selling their oil to Poland, and we've had, pretty good pullback on the daily from 130 or so. Shorter term, it looks constructive, neutral. I don't know. What are you thinking here?
Yeah, oil. It's definitely a bearish right now, bearish trend here. But still, as you can see, it's creating a pattern of a triangle right now. So if I see it, like the support will be around 97 to 94. This will be the support for oil, but on a lower time frame, if I go on a 1 hour chart here, it has already just rejected the lines. It has rejected the lowest levels of the Bhumi here, and it has come for a buying zone on a 1 hour time frame, like 1 day or 2 day trade, you can say. So right now, again, it has entered into a very, very volatile zone of around 102 to 99, like this price. So right now, as it is piercing from beneath to above, I strongly feel that might be a break upwards in upward direction. So as it will be going for upward direction, I'll be looking for at least like 106 to 107 in US oil as for now.
Okay, so here's another example, and you can tell Raksha's a pro because on the daily, the first one she's showing, it's a triangle. That's an indecision pattern. If you think you know which way it's coming out, I think it has a downside bias because it's a descending triangle. But then if you notice, she goes to a smaller TF and the picture gets much more clear. Risk management becomes much easier. And, so you brought home my point that there are a lot of markets at indecision points right here. But if you drill down and just go with, what's happening on an hourly or a 4 hour or whatever TF you're looking at with your microscope, and you lower your expectations for the trade, you probably have higher probabilities for the outcome. Is that the way you look at it? Because it seems like, you're a little more neutral when you look at things long term, but you can really bracket a market when you go shorter term for where you would buy and sell it.
Absolutely. But I personally don't go below 1 hour, because 1 hour chart or 1 hour time frame cuts most of the market intraday noises and most of the volatility of that particular session. So if there is any close above or below in a 1 hour time frame, I take any trading decision based on that only, on 1 hour time frame. I go for a longer picture about the longer trends, what exactly is the trend, what is the nearest to resistance and support on a longer time frame, because that will be the major reversal or a bounce back for any price action. So on a longer time frame, I have my clear picture that, okay, this is a downtrend. I will be focusing only for sell from for this particular script. Then I go on a lower time frame, like 1 hour, to get back to that micro picture, as you were saying, to get a clear picture that how long I can wait, what will be my risk to reward ratio. Like suppose if I go for a buy right now, as per this price, I have to put my SL below like 99 here. That will be a very bad R2R ratio for me. So for any buy, I will wait for my price to come down till at least like 99.13 or 99.96. When it rejects here, then I can go for my target of 103, 104, and then go for 106. Because at this point of time, my risk to reward ratio will be very less. So even if it, as market is the king, so even if it goes beyond I cannot predict that, but if it goes beyond my prediction or beyond my analysis, I have very little thing in my hand to lose. So I always go for the best of the risk to reward ratio, where I at least have 1:2 for RNR or for RS2R for me. So I don't go anything below that, not even 1:1. If it is 1:2, then only I'll go for any kind of trade.
Okay. And we've had some pretty wild action. You're going to go the Dow now, or what's the US 100?
So it is coming here. It's exact price for 2020 high is 102.992. We're up almost reaching to the decision. It's like a climax here right now. Yeah. We can see either it's going to break out up and just going for this 103.18 and 103.540 as per the next hurdles for this rally, or it can just simply reject this price and go back to like 102, 101, this price, go back to this level here.
What is US 100 there that's trading? What market is that?
This is NASDAQ, right? And yes, US 100. Oh, most of many of our subscribers are actually using that. So I was just preparing the newsletter for them. That NASDAQ is fall, the crazy fall in this NASDAQ. Many were like, they have took the position in that for buying, and they were waiting that what exactly was going to happen. So I was just preparing for that, and as you have just pointed this out, I'll just share it here only for anyone who is using or who is trading US 100. That we have find a very good support at US 100 here, and this is almost like 2020 high. 2020 high price at around 12,971 to 13,004.
You mean the high before the COVID crash? We've retraced all that?
Sorry, what?
You're saying it's pulling back to the 2020 high, and that was 2020 high was the COVID crash.
Yes.
Right.
So it has pulled back till the price, like from this entire year, it was all red. Only in like March, mid of the March to end of the March, we saw some kind of rally here. It's going back again. Now we have a good support here, because if it until and unless the price is trading above 12,770, it is still bullish. It can go back. It will be going back again for at least for 13,500. That's what I see in US 100. But if it is going to break 12,770, then it's definitely is going more. It's plunging more to like 12,400 or 12,450 as the lower targets of US 100.
Okay.
We were talking about Euro USD also, right?
Yeah, right.
I was just checking that, and this was another newsletter I was preparing for our subscribers here, and this line here is the all-time trending line here. I'll just show you. It will be a clear picture for you all. So this is the all-time trending line here, where market. Right. After this has now this trend line has been breached with the dollar rally here, but as here also, as you can see, we can see some support here at 1.05279 precisely. So that's like 78.6% of the Fib retracement of all-time low to all-time high. So again, we have a confluencing support for Euro USD and a confluencing resistance for DXY. So we might see some kind of bounce from this price. But if it not, and it's going back till at least till this 1.02 in Euro USD. Just like here, some hurdles in between, and if not, then it's going back to that 0.982. I don't think so it will be that worse, but at least like 1.01 is something we can see in Euro USD if this support is being breached.
Okay. So technically, and that's why there's only, I think, 7% bulls in euro. Does the sentiment bother you?
No,
short.
No. I told you that I always take my trades based on a good R to R ratio. So even if it is going wrong, I know how much I have a decided amount that this is the amount I am ready to lose on any trade. Either it will hit my stop loss or either it will hit my target. That's the only way to trade. Okay. So you should always just, I always plan that my stop loss is very strict so that even if it hits out, it doesn't hurt me so much.
Okay. And price action is king over sentiment. You know, you never know how long. This is quite a stretched rubber band, that's for sure, for at least for right now. And Raksha, people that want to follow you and get involved with you, if you'd like, you could show your website and give them contact information.
Sure. This is a website here. It's nifty.in.
Yeah.
So we have all the informations about what Bhumi 2.0 is, how we actually the testimonials and how people are using it, and much more informations. What all markets we are covering. We're covering almost every market here, and we have added crypto also in this. And the basic FAQ about Bhumi, everything about Bhumi, what exactly Bhumi is all about, what exactly are the elements of this. So this is where you can actually just meet us.
Okay. And yeah, you have master classes. Saw you had a big webinar, I believe, last week where you were sold out, and I was asking if there was anyone that would sell me a ticket.
Always. Do you think that you really need to ask us?
I thought people, there were ticket scalpers that they'd let me in if I bought a ticket. Anyway, I'm kidding.
Just barge in like it's your own room.
Yeah, I would mute everyone else so I could get all the attention. So anyway, Raksha, some great looks, and I wish you success. And next time you change your Twitter handle, let me know.
Sorry.
Anyway, Raksha's new Twitter handle is her name, Raksha Sony, and then the 27, right?
Yes.
Okay, so Raksha's come out and she's using her whole name now, not just a handle, and that's a sign of someone who is okay representing what they do. And some real nice looks, Raksha. I wish you and Karthik all the success. I'm always rooting for you guys.
Thank you so much, Dale. Thank you so much. And I wish you all a very, very, very amazing day and very amazing life ahead.
Thank you. Raksha Sony, check out Bhumi. It's a pretty nice algo that they put together, and that's going to be a wrap for us. That's Wednesday, and we'll see everyone tomorrow. You could join the team in about 22 minutes on the morning edge. And remember, it's okay to say I don't know. It's okay to say I was wrong, and it's okay to do nothing if you do not see anything. Sometimes you have to drill down. Raksha gave another example of that. So good trading, everybody. Don't just count your pips, count your blessings, and we'll see you on F.A.C.E tomorrow. Thanks again, Raksha.
Thanks, Dale.
All right. Bye-bye.